Taiwan Semiconductor manufacturing company. Today let's talk about one of the most important companies in the world. TSM is a semiconductor manufacturing company, maybe the biggest manufacturing company in the world. They manufacture chips for Nvidia, Apple, AMD, and so many other companies. Um, they are situated in Taiwan. There are a lot of geopolitical tensions around there between China and Taiwan, even the United States. So it's a really good company, a very important company to the world. So let's talk about that. TSM is a $430 billion company. They probably produce around 95% or more of the most advanced chips in the world. Uh, so that's a really important company. They produce chips for the biggest and most technological companies in the world. So they are trading with a P around 13. The revenue growth have been growing a lot, around 80% a year. They have high gross margins, almost 60%, and their net margin are really high, almost 40%. Their balance sheet is really healthy. They have around almost $45 billion in cash. They have a long-term debt of $28 billion, so they are positive. They are net positive. They can buy their long-term debt with their cash in hands. Their return on invested capital have been really high, around 26% in the last year, and they have a really low debt. So they are paying a dividend around 2.6%. So what we like in the company, that's their revenue growth is growing a lot, around 80%. So that's a check. They have high gross margins, both high gross margins and net margins. That's really good. I really like it. They have low debt. Their return on invested capital is really high. It's really good. Almost 26% last year. Their moat, I believe they have a wide moat. So let's do an exercise. So they produce the most advanced chips. If you want to buy technology, you have to buy products that are manufactured by TSM. The other companies that manufacture chips, it's Samsung and Intel. Intel is really behind. They are trying to catch up, but they are still behind. Maybe in 2, 3, 5 years it's gonna be different, but for now you have to buy from products that are manufactured on TSM. So they have a wide moat, a really wide moat for now. They have in free cash flow positive. They are returning capital by, they are doing dividends, so a healthy dividend. So I really like the company and what we are seeing here. So if you like, let's talk about valuation now. Let's do our discounted cash flow. Let's analyze. They have been growing a lot. The revenue are growing 25% in 2020. 2021 they grow around 18.5%. In the last year they grow almost 50%. Their revenue grow 45%. So for this year they reported last week, so that was not a good report. Their revenue did decrease from the last year. Analysts are expecting that their revenues this year are going down around 3%. And for the next year they resume the growth. They are expecting to grow 21% next year, 2024. So that's good. Maybe it's an optimistic way of looking into it. Maybe not. Let's see. But I do really believe they have a good moat, and everyone is talking about AI. They will need a lot of chips. So if you want to buy chips from Nvidia, from other companies, you will be doing TSM a favor. So if you buy Nvidia, you are buying from TSM. If you are buying AMD, you are buying from TSM. If you are buying Apple, you are buying TSMC products. So that's good. So if you are buying the most advanced chips, you are buying from TSMC. So that's why I believe they have a really good moat, and they are not their stock value is not high for what we have seen. They are trading at a P of 13. It's really low. I know there are a lot of risk in this company. I was looking into TSMC in the last year. They were trading almost to $60, which was really low. I was looking to it, but I was afraid because the geopolitical tensions around there. Everyone was thinking about China invading Taiwan and still are. So that's why they are trading at a lower valuation. So bear in mind the risks. So let's look into it. For my base case, they will grow above 10%. So that's for sure. I believe the semiconductor market will grow a lot. They are growing a lot, and they will continue. So if you believe in technology, that's why it will happen. So I will put my base case. They will grow around 15% for the next 5 years and 10% after that. A P of 16. I'm not doing a premium, but this is a company that they deserve a premium. So there is a lot of risk around that. So maybe I should do a lower P. I don't know. If you have another opinion, just write in the comments. I would like to hear your opinions as well. So my discount rate, it's my normal discount rate. I want 12.5% for my returns, so I will look into that. Margins. They had in 2020 they had 38% margins. In 2021 they had 37% margin. In 2022 they have a really high margin, 44%. I believe this is a fluke year. Last year and the year before, there was a lot of demand for their products, so they have a lot of power in their price. There are a lot of pricing power. So I will look into around 38%. Maybe it's high, maybe not. Let's see it. It's my base case. So for my bull case, I will expect their revenue to grow around 18% and 12% for the last 5 years. P of 80. Their margin can improve around 41%. Bear in mind that they had 44% last year, so maybe that's not too optimistic. But the main purpose of this analysis is to be conservative, so we have to do our conservative analysis so that we have a higher margin of safety. So that's my assumption. For my bear case, 12% for the next 5 years, 8% for the last 5 years, a P of 40, 35% margin, which I believe that they can do it really easily. So with that assumptions in mind, we came with an intrinsic value of $93. So they are trading around $85 at the moment. This is a really good company that sells check marks, fair valuation. I do believe we have a lot of margin of safety around there, but there is some risks associated to this company. Taiwan, there is a lot of geopolitical tensions around Taiwan and China, so there are a lot of risks. That's why Warren Buffett and Berkshire Hathaway bought shares of this company last year, and they sold it almost immediately because of the risk. But that's a really good company. That's a lot of risk on there, but I do not own this company, but I really like it. I'm looking into it. Maybe if we have a dip in the market, and maybe if we have another opportunity, I might buy this company. But it's a company I really like. The only problem around that, it's a Taiwanese company, so there are a lot of risks around there, and that's something we have to look into it and do your due diligence. So I hope you liked that analysis, and what do we think about the company. So if you like it, please subscribe. Bye.